Have you ever stopped to think about something like insurance accounting software? Sounds pretty specific, maybe even a bit dry, right?
It might seem that way on the surface.
But what if I told you it's actually right in the middle of this huge, fast transformation? And it's a really key part of the whole fintech scene.
Absolutely. It's more dynamic than you might think.
So today, we're doing a deep dive into exactly that, the global insurance accounting software market. We're working from a really comprehensive market pulse report by Cognitive Market
A
Research.
very detailed source.
Yeah, our mission, yours and mine, is to pull out the most important bits of information, the real nuggets, to give you a shortcut to understand this rapidly changing area.
Okay, let's unpack this. So, starting with the big picture view, this isn't just some small niche market. It's really taking off. The numbers are quite eye-opening.
They really are.
Back in 2021, the global market size was valued at just under what, $6.5 billion?
That's right, 600 or 94.77 million, to be precise.
And looking ahead, it's projected to hit over 8.4 billion by 2025. 445.1 million dollars.
But here's where it gets, really interesting. By 2033, that number is expected to jump way up to over $14.2 billion.
$14,278.6 million. It's quite a leap. And what's fascinating here is just how quickly this really foundational piece of the financial world is evolving. That impressive climb translates to a compound annual growth rate, a CAGR, of nearly 6.8%, 6.785% to be exact.
Right, almost 7% year-on-year growth.
Exactly. And this isn't just, steady plodding growth. It really underlines this undeniable rising demand for solutions that are digital, transparent, and crucially compliant for financial reporting, especially in insurance.
Compliant, yeah, that's key.
It's a fundamental shift, really, how insurance companies manage their core operations. It's being driven by, well, everything from new regulations to just needing faster, more accurate data.
Okay, so the global trend is clear. Big growth. But is it happening evenly everywhere? Where's it most concentrated? Let's maybe dig into where the demand is hottest, because like you said, while the global trend is up, some places are really exploding.
That's a good way to put it. Performance does vary quite a bit by region.
North America, for instance,
Right.
has traditionally been the largest regional player, right?
Yeah.
And it seems to be holding that position in terms of sheer volume.
That's right. North America's market was almost $2.6 billion back in 2021, and it's projected to more than double, hitting over $5.4 billion by 2033.
Still growing strong then.
Definitely. It's growing at a solid FDR of over 6.3%, which, tells us that even in mature markets like the U.S.,
Which leads the pack there.
it does. The U.S. is expected to hit over $4.4 billion by 2033. Even there's this deep need to modernize older systems. It's not just new players, it's the established giants upgrading their sort of financial backbone.
Makes sense. Updating legacy systems.
Exactly. And interestingly, Canada is actually growing a bit faster than the U.S. Its CAGR is over 7%, suggests a really strong push for efficiency there.
Oh, interesting.
And Mexico, too, showing really robust expansion, set to more than double its market by 2033 as well.
Okay. So North America is solid, but maybe not the fastest growing. What about Europe? Looking across the pond, Europe's another big chunk of the market. Started at, just over $1.4 billion in 2021?
Correct. $1,409.36 million.
And projected to nearly double, reaching almost $3 billion by 2033. The key GR looks pretty similar to North America, just over 6.3%.
Yes, very similar overall growth rate.
What stands out to you within Europe? Any particular countries driving that?
Well, the UK is growing steadily, a solid 6.6% CAGR, but Germany really catches the eye.
Germany, how so?
It's a major market, and it's set to grow at a healthier TGR of over 7%. It should reach over $630 million by 2033. That points to a really strong push for digital transformation in one of Europe's biggest economies.
Okay, so Germany's a bit ahead of the curve there.
Seems like it. Then you have France and Italy growing a bit slower, 2 GRs in the high fives.
Right.
And Russia, interestingly, is lagging behind the regional average with a CGR just under 5%. Could be different adoption speeds, maybe market dynamics specific to Russia.
Yeah, it could be several factors.
But then you see Spain performing strongly, similar to the UK's growth rate. And even, smaller economies, Sweden, Denmark, Switzerland, they're all expanding steadily.
So it's pretty broad-based growth in Europe, too.
It really is. Even in markets maybe seen as more traditional or conservative, there's this universal push towards modernizing financial reporting in the insurance sector.
Okay, now, here's where the report says it gets really interesting. Let's shift over to the Asia-Pacific region. This area, it says, shows tremendous potential. started at about $1.6 billion in 2021.
$610.7 million.
But it's projected to just skyrocket, hitting nearly $4 billion by 2033.
Almost $326.63 million.
Yeah, and the KGR here is what, over 7.7%? That's the highest regional KGR globally.
It is 7.719%. That is definitely the standout growth rate. This is clearly where the momentum is strongest.
But why APAC? What's driving that incredible pace?
Well, if we connect this to the bigger picture, it suggests that many emerging markets in APAC are potentially leapfrogging, skipping older tech and jumping straight to cloud-native solutions, modern digital platform.
Right, adopting the latest stuff from the get-go.
Exactly. Look at China, for instance. It's projected to nearly triple its market size. It should reach almost $1.2 billion by 2033. That's a CGR close to 8%.
Wow, triple.
And then there's India, not far behind China in projected size, but it boasts an even more astounding market-leading CGR of over 8.5%.
8.5%, that's huge.
It is, expected to reach over $630 million. This kind of, explosive growth points to rapidly expanding insurance sectors in those countries, combined with a real drive for advanced, scalable accounting tools.
So bigger insurance markets needing better tools.
Precisely. And it's not just the giants. Even smaller, but often very agile, economies are seeing incredible surges. Singapore, for example, has a CGR over 8%.
Singapore too, okay.
Yeah, it highlights that agility and digital adoption are really key, regardless of the absolute market size. We see strong growth, too, in Japan, South Korea, Southeast Asia as a whole, Taiwan, Australia. It's across the board in APAC.
That really is a powerful transformation happening there. Okay, let's quickly cover the other regions mentioned in the report. South America.
Also showing healthy growth, moving from about $400 million in 2021.
So $396 million.
Right, $396.181 million to over $900 million by 2033. That's a TAGR of over 7%.
Solid growth? Any standouts there?
Brazil leads in market size, naturally, but Argentina actually has a very strong TAGR, getting close to 7.6%. Chile's doing well, too.
Okay, and the Middle East.
Another region on a substantial upswing, projected to more than double its market. It started around $260 million.
$259.791 million.
And should hit nearly $590 million by 2033. The CAGR there is also just over 7%.
And within the Middle East.
The UAE really surges ahead. It has one of the highest TAGRs in that region, over 7.7%.
That's not too surprising given their focus on tech.
No, it fits the pattern of heavy investment in technology and, smart city initiatives. Saudi Arabia, Turkey, Egypt, Qatar also showing good growth.
Right. And finally, Africa. Often seen as an emerging frontier. How's it looking?
It's also on a notable growth path. Projected to more than double as well, from about $227 million in 2021.
$227.317 million.
$227.317 million.
Into over $500 million by 2033. The CAGR is around 6.3, 6.4%.
Similar to North America and Europe, then, in terms of growth rate.
Roughly, yes.
Right.
Within the continent, South Africa really stands out. It's projected to reach nearly $200 million by 2033, and its CAGR is strong, over 7%.
So South Africa's outpacing the continental average.
It is, but you see growth in Nigeria, too.
Yeah.
And the rest of Africa category is also expanding. This broad-based growth, even across Africa, just emphasizes that the need for these modern, transparent accounting solutions is truly global now.
Yeah, it seems universal.
From the most mature markets to the ones developing rapidly, that push for digital finance and insurance is everywhere. Okay, so we've looked at the numbers, the regions. Incredible growth across the board, markets doubling, sometimes nearly tripling in value over roughly a decade. So what does this all mean? Why is this happening now?
Right. If we try to synthesize this, connect it to the bigger picture, it tells us something pretty profound about how industries are adapting to this data-first world we live in, this powerful growth trajectory in insurance accounting software. It seems to be primarily driven by, I'd say, three key things.
Okay,
First, there's the increasing digital transformation happening within insurance finance departments themselves, just modernizing operations.
Makes sense.
Second, the escalating need for really robust regulatory compliance, things like IFRS 17, for example, that demands much more transparent, accurate, and often faster reporting.
The regulatory hammer. Always a driver.
Always. And third, rising customer expectations. Even if it's back-end software, customers indirectly benefit from and increasingly expect things like real-time reporting access, maybe through portals, and the flexibility of cloud-based solutions.
So internal push, external rules, and customer demand pulling it forward.
Exactly. And that momentum is strong everywhere. We see it in the huge economies like the US, China, Germany, but also in smaller yet incredibly agile markets like Singapore, Qatar, South Africa.
Yeah.
So this isn't just about buying new software, it's really about the fundamental infrastructure of a massive global industry becoming, well, more intelligent, more efficient, and ultimately more responsive.
That's a great summary. Clearly, this market isn't just ticking along. It's on a genuinely powerful growth path. It signals a real foundational shift in how the insurance world works.
It really does. And, this raises a pretty important question, something for you, the listener, to think about.
Oh, go on.
If the very backbone of insurance, its accounting, its financial reporting, if that is undergoing such a rapid digital transformation, what might that mean for the entire customer experience in insurance?
The ripple effect.
Exactly. How will these sort of deep foundational shifts influence how we as individuals, as businesses, how we actually interact with insurance companies in the coming decade? And maybe what new innovations might spring up from this deep digitalization? It's something worth considering. Welcome to the deep dive. Today, we're peeling back the layers on a market that maybe at first glance seems a bit niche, insurance accounting software. But trust me, this isn't just about spreadsheets anymore. It's rapidly becoming, well, really vital, super dynamic in the financial world. So our mission for you today, let's unpack why this specific software has gone from just a back office tool to something genuinely strategic, especially with, all the regulatory complexity and this huge digital transformation happening. What's your immediate take? How crucial is this space for insurers right
Yeah,
now?
it's absolutely foundational, really. This market, it's way beyond just financial reporting. It's basically the backbone of an insurer's financial integrity, their operational agility, too. I mean, without robust, smart accounting software, companies would just struggle. Staying solvent, compliant, competitive, it'd be tough,
Yeah.
especially in this, complex global landscape. We're really talking about the core infrastructure that lets them function. And there's some really powerful forces driving its evolution.
Okay, right. Let's unpack those forces then. What would you say is the primary catalyst? What's really driving this market's growth? Is it mostly about regulation, or are other things just as important?
Regulation is definitely huge, maybe the most immediate pressure point. Insurers everywhere operate under incredibly strict rules. You've got IFRS 17, that's the big international standard for insurance contracts, right? It's totally changed how they recognize revenue and liabilities. And Solvency Third in Europe, that huge regulatory regime. Trying to navigate those, plus all the different national accounting standards,
Hmm.
manually, pretty much impossible now. So advanced accounting software, it doesn't just automate the reporting side. It helps ensure real-time compliance, cuts down manual errors massively, and significantly lowers audit risks. It's about turning this potential compliance burden, which could be really costly, into something proactive, a strategic data asset almost. Like, it lets insurers model the financial impact of new products or policy changes super fast. That really changes how quickly they can adapt.
That is fascinating, turning it from a burden into an asset. So, okay, beyond just meeting the regulations, how are insurers using tech to actually transform how they operate? And how does that drive demand for this software?
Yeah, the digital transformation across the industry is, well, it's profound. Insurers are moving fast towards cloud solutions, automation, advanced analytics, really trying to streamline their financial ops. It's not just an upgrade. It's more like rethinking how they work entirely. Think about the sheer volume, right? Claims processing, premium adjustments, commission calculations. What used to take, teams of analysts, days, maybe weeks, to reconcile manually. These intelligent platforms can now process that in real time, instantly flag issues, calculate complex multi-currency premiums across global policies, stuff like that. So it gives finance teams this live pulse on the business, which means much greater agility, better data-driven decisions.
Right, and it's not just internal processes, is it? I mean, the insurance landscape itself keeps expanding, diversifying. How does that growing complexity play into the need for this software?
Exactly. That's a key point. Insurance isn't just one thing anymore. You have life, health, property, casualty, plus all these specialized niche coverages. They're all growing, evolving,
Right.
and the underlying accounting gets exponentially more complicated. Just imagine an insurer, right? Maybe offering life insurance here, health plans somewhere else, commercial property globally. Every product line, every market brings its own accounting rules, its own revenue recognition issues, different premium structures. So insurers, particularly the ones with diverse product lines, they need really scalable software that can handle everything: multi-line accounting, premium processing, complex commissions, reinsurance management, you name it. That sheer complexity is a huge driver for flexible, specialized accounting solutions. They have to keep pace.
Okay, it sounds like an incredibly dynamic market, but even fast-growing markets have challenges. What are some of the big roadblocks here? I'm guessing high implementation costs, maintenance costs, that must be a factor.
You're absolutely right. That's a major hurdle. The costs can be really substantial. It's not just the software license. You've got customization, tailoring it to specific business processes. Then there's employee training, ongoing support. It adds up. And this can be particularly tough for, say, smaller insurers. They often have tighter IT budgets. So while the long-term ROI, the efficiency gains, the reduced errors, often justifies the spend, that initial outlay, it can genuinely price some smaller companies out, or at least make them delay adopting it.
Okay. And what about the headache of integrating these new systems with older stuff? I mean, lots of companies are still running on legacy systems that are decades old, right?
Oh, it's a huge challenge, sometimes called digital debt.
Hmm.
Many insurers are still operating on quite outdated legacy infrastructure, and that makes moving to modern platforms technically really demanding and
Yeah.
risky. You're looking at significant data migration risks, potential compatibility problems between the old and new, and just a very real threat of disrupting operations during the switchover. So all these factors, they make insurers quite hesitant sometimes, even when they see the benefits of the new software. It's kind of like trying to put a jet engine on a classic car. You
Mm.
know, possible, maybe, but really complicated and fraught with issues.
Yeah, I get that analogy. Okay, and finally, data breaches are always in the news. These platforms handle incredibly sensitive financial data, personal data too. What are the big concerns around data security and privacy here?
This is absolutely paramount. It's truly non-negotiable. These platforms are like the nerve center for an insurer's financial health and their customer data. Any breach will carry severe legal consequences, reputational damage too, huge. And this concern is maybe even amplified for cloud-based systems, right, where the data isn't on their own premises. Plus, you have to comply with really strict regulations, like GDPR in Europe for data privacy, HIPAA in the US for health information. It adds another whole layer of complexity, demands constant vigilance. It puts immense pressure on the IT and security teams to keep everything absolutely locked down, ironclad.
Okay, so given those challenges and all the rapid changes we've talked about, where do you see the most exciting innovation happening, say, over the next few years? Let's start with cloud. Software as a service, SaaS solutions, how big are they becoming?
Oh, they're definitely leading the charge, yeah.
Yeah.
These models are seeing massive growth, mainly because they're often more affordable, they're scalable, easy to access. For insurers, SaaS typically means less upfront costs for infrastructure, quicker deployment times,
Yeah.
and the ability to scale up or down more easily as their needs change. Also, things like real-time collaboration between different departments, automatic updates, that's a big plus. It ensures they're always on the latest software version without needing big manual upgrade projects.
Yeah.
So that flexibility is making SaaS platforms, well, the preferred choice for a lot of forward-thinking insurers, those looking to stay agile.
Right. And you can't really talk future trends without mentioning AI, automation technologies. How are those being used? How are they changing insurance accounting specifically?
Yeah, this is where you see some really transformative stuff happening. We're seeing tools like machine learning, robotic process automation, RPA, basically software bots doing repetitive tasks like data entry or reconciliation, and broader AI capabilities being integrated more and more. These tools, they significantly reduce errors by automating things like reconciliation. They can enhance fraud detection by spotting weird patterns much faster than a human could. And they enable powerful predictive analytics, so it streamlines really complex processes, helps with decision-making, boosts efficiency and accuracy across the board. Just imagine an AI sifting through millions of transactions, pinpointing something suspicious in seconds. It's powerful.
That is a huge leap. Wow. Okay. And lastly, what about this demand for real-time analytics dashboards? It feels like everyone wants instant insights now, not just, month-end reports.
They absolutely do, and, well, for good reason. CFOs, finance teams, they don't want to wait for period-end reports anymore. They need instant access to critical performance metrics, claims ratios, profitability insights, so they can make timely, informed decisions. So in response, software providers are really enhancing their platforms, building in advanced analytics, intuitive dashboards, things that convert raw financial data into clear, actionable strategy right away. It's really about turning data into immediate value, letting them spot trends, risks, opportunities, basically in real time.
So, what does this all mean for you listening? Whether you're prepping for a meeting, maybe just catching up on the field, or perhaps you're just insanely curious. It means this insurance accounting software market is evolving incredibly fast. It's constantly being shaped by these intense compliance pressures on one side and these really groundbreaking tech innovations on the other. It's this continuous balancing act for insurers, isn't it? Embracing the cutting edge stuff while making sure everything's rock solid secure. Data integrity has to be perfect. It's a space where, a traditionally back office function is genuinely becoming a core strategic differentiator.
Precisely, yeah. And maybe one final thought to connect this to the bigger picture. Consider how this relentless drive, this push for real-time insights and predictive analytics, how that might fundamentally change the actual roles within insurance finance teams, say in just the next few years. Will we see human finance professionals managing mostly the exceptions, the tricky bits, while AI handles the routine rules of financial operations? It raises an interesting question, I think. What new skills will become the most valuable in that kind of evolving landscape? Definitely something to mull over as you go about your day.